Tesla stock has been trading at very low prices for quite some time, and there have been comments about why this may be happening and the possibility that the company's stock price will go back up the chart. Amidst uncertainty surrounding Tesla's stock valuation, Tesla investor Dan Ives has said that Tesla stock will need to have a significant surge in the future, and these 9 things need to be implemented for that to happen. Hey guys, welcome back to Tesla Tomorrow. Dan Ives is a long-time Tesla bull and a huge fan of the stock market. He's also a managing director and senior equity research analyst covering the technology sector at Wedbush Securities since 2018. In 2022, the Tesla investor said that despite supply chain issues, Tesla's delivery numbers combined with an impressive earnings beat speaks to an EV demand trajectory that looks quite robust for the car company. And now the stock investor has cited what Elon Musk needs to do for Tesla's stock price to go back up. What are the 9 catalysts for Tesla stock, according to Dan Ives? Let's find out, but before we do, if you like this type of content, don't forget to like and subscribe and turn on notifications to keep up to date on everything going on with Tesla. Number 1. Name a CEO for Twitter by the end of January. Many Tesla investors believe that Elon Musk is spending too much time on Twitter and is not giving enough time to his EV company. Musk's new company is going to require a lot of time and commitment to bring it back on track to make massive revenue. The tech expert had previously told Twitter employees in a meeting that Twitter needs to bring in more cash than it spends. In the case where it doesn't, there will likely be a massive negative cash flow, which could lead to bankruptcy. However, recent news has shown that Elon Musk may soon start directing more of his attention back on Tesla, as he is looking to hand over the managerial responsibility for Twitter to someone else. The Tesla CEO has said that there is a possibility in handing over the management of Twitter to someone else when the platform is eventually set in on the right trajectory. Several other analysts like Gary Black also believe that unless Elon Musk changes his mind on stepping down as the Twitter CEO, then it may all be bad news for Tesla stock. Number 2. Stop selling stocks and adopt a formal plan for when to sell shares. Dan Ives wants Musk to formally adopt a plan for when he will sell shares. Elon Musk has been selling Tesla shares in large amounts in the past few months, recently selling about 22 million Tesla shares in 29 separate transactions worth roughly $3.6 billion. Last year, the Tesla CEO revealed that he had sold 19.5 million shares of the car company worth $3.95 billion, just days after completing a $44 billion takeover of Twitter and after stating that he was done selling. With Musk as the CEO of Twitter, it is uncertain whether he will continue selling Tesla shares, especially as major changes continue to be implemented in the social media company and the need for more funds and attention increases. Musk took over the social media company earlier this year amidst concerns from investors, and ever since, the automaker's stock price has experienced only a few surges with multiple drops from time to time. Not only has this new venture caused Musk to sell several Tesla shares, it has also taken a percentage of his time, leaving less time to attend to Tesla. Some analysts have said that for Tesla stock price to recover from the dip, Elon Musk can't sell more Tesla shares until fourth quarter earnings are released towards the end of January. Number 3. Cut back on aggressive growth forecasts for Tesla. Tesla bull Dan Ives also cited that Musk needs to lower his growth targets for Tesla and opt for more realistic goals. He expects the Tesla CEO to lay out conservative 2023 delivery goals and targets. According to Ives, the 50% growth target is not happening in his opinion, and a 35% plus delivery growth seems more hittable and realistic for 2023. Elon Musk had previously said that Tesla sales will grow by more than 50% in 2022 compared with sales 2021. According to the Tesla CEO, 2021 was a breakthrough year for Tesla and for electric vehicles in general. He added that while Tesla battled with supply chain challenges throughout the year, the company managed to grow its volumes by nearly 90%. Number 4. Announced that Cybertruck delivery will begin next year. Tesla's Cybertruck has remained one of the automaker's most anticipated and more delayed projects. Despite unveiling it in 2019, Tesla has failed to enter the Cybertruck into production. However, the car company has confirmed that the Cybertruck is coming in 2023, although the official production of this pure electric pickup truck is expected to commence only late this year, with a major ramp-up likely scheduled at the beginning of 2024. Tesla's Gigafactory in Texas is already in the process of tooling for the electric pickup truck. According to Tesla's well-known investor, Gary Black, the automaker could deliver 10,000 Cybertrucks in 2023. This comes at a time when Tesla is sailing through choppy waters, and there are a ton of questions about the Cybertruck, including how long it will take for Tesla to fulfill the millions of orders that it already has it. Number 5. Make changes to Tesla's board to add more people with experience in tech and electric vehicles. Dan Ives also suggested that Tesla's board should be reshuffled in order to include more people with experience in the EV business. There is also a possibility that Musk will be passing on his role as Tesla's CEO. According to a Tesla board member, Musk recently floated the possibility of someone succeeding him as Tesla's chief executive. If this is to happen, then it should be passed on to someone who has sound knowledge of the business, and is most likely a member of the Tesla board. According to recent news, Musk has identified a potential successor who could serve as CEO of Tesla. Number 6. Implement a large share buyback. A large share buyback has been anticipated for a long while now. And actually, according to Leo Kogoan, who is Tesla's third largest shareholder, Tesla will have a huge market cap by 2030. And if it can do a $1 trillion buyback between 2026 to 2030. Kogoan said in a tweet that he requested that Tesla does a $100 billion share buyback from 2022 to 2026, and then a $1 trillion buyback between then and 2030. He added that if Tesla buys back its shares at $1,000 per share between 2026 and 30, then it will remove $1 billion out of the 3.14 billion shares available today, reducing that number to around 2.14 billion. And since there's going to be fewer shares for investors, the stock price could potentially shoot up from $3,000 to $5,000 per share. However, Tesla investor and YouTuber Dave Lee said that Tesla does not have serious expenditure needs and can't currently afford to allocate 80 to 90% of its funds to a buyback like this, except if it successfully rolls out its FSD software and makes about $20,000 to $25,000 in operating profit per vehicle. Number 7. Provide more financial metrics and transparency around margins. Dan Ives maintains an outperform rating and a $175 price target on Tesla stock. He, however, believes that Tesla needs to give more financial metrics and transparency around its margin structure. He described this as a hidden gem in a company with more production and sales in China, with Giga Berlin and Austin ramping up. He added that long-term margins will be key for Target Street. Number 8. The more political Musk is on Twitter is bad for selling electric vehicles to the masses. Many Tesla investors are of the opinion that Tesla's brand image is taking a hit as Elon Musk wades further into politics in his bid to turn Twitter around. Tesla's reputation remains closely tied to that of its CEO, whose fame has increased with his wealth and political activity. But Dan Ives suggests that if Musk reduces sharing his political views on Twitter, this could have a positive effect on Tesla. Number 9. Lay out a strategic plan for Twitter. Dan Ives said, at the moment, the fear is that Twitter's bleeding money and advertisers are fleeing, and it all translates into more losses and possibilities of Musk selling more Tesla shares. He added that once a new CEO is employed, then he can lay out the 3-year strategy of Twitter. During Musk's initial days at Twitter, the CEO, in a meeting with Tesla and Twitter employees, disclosed that for the company to reach a significant level of growth, there needs to be room for it to build revenue and then bring in more cash than it spends. He added that without this, there could be massive negative cash flow, which could result in bankruptcy. Seeing that Musk is dedicated to raising revenue at his new company, it could be said that Tesla is not totally safe and may continue to see less of the CEO's attention and dedication. What do you think about Dan Ives' comments on this? Let us know down below. And don't forget, if you want to know more about what Tesla's been up to in the last few days, you can go ahead and click on this next video on your screen. See you there.